Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is, I guess it's a Wednesday today. Wowee. Well, the inflation numbers came in, and they were looking pretty awful. It is not the kind of numbers that you wanted to see. Inflation up 9.1% in June, the most since November of 1981. And boy, I remember that. I remember that. Believe it or not, I'm old enough to remember what it was like. We had gas lines. It was Jimmy Carter, kind of similar to this administration, kind of feckless, not really doing the right thing, unfortunately. So, one thing is good. I did pay a little bit less at the pump today. It was exciting. I paid $4 a gallon here in Dallas. It was a grand opening special for a new Murphy Oil location. Just a little aside, not really very exciting there, but I was excited not to pay $5. That's for sure. Again, it's just looking like we're just going to have more inflation. I mean, the CPI inflation rate spiked at 9.1% in June, and it was up from May's 8.6%, and it's a 40-year high. And, it's a core inflation, which it doesn't include energy and food, went down to 5.9%. But does that really matter if you can't fill up your car? I don't know if it does or not. Not looking too excellent there. Not looking good. It's just tough all over. Well, there is one stock that that is the stock of the day. This is the Ibd stock of the day, and it is Hershey's, HSY. Now, I had a short on this one. I had to cut it short because it was going in the wrong direction. But I guess, when everything is going, when everything else is going bad, Hershey's is selling because, hey, there's one little thing in the world that this doesn't change, and that's Hershey's. Would I buy this thing? Well, it's getting near a cup with handle buy point, and that would be at 222.75. Currently, it's at 220.67. And what's great about it is it's got relative strength at new all-time highs. And the interesting thing, the necessity stocks are faring pretty well. That, of course, is the consumer staples, some of the medical stocks. It's just been a tough row out there all the way around. Let's take a look at the live chart here on that and see if we can take a look at it. Basically, relative strength at near an all-time high, 95. This is one of the things you want to always look for if you're looking for a stock, is you want to see it moving up in terms of the relative strength. And boy, it definitely is. There's no question about it. It is sort of kind of stuck here. It hopefully will come above this buy point. Now, I think that it might be a buy. Now, I wouldn't be buying a ton of it here, I can tell you that. But in this kind of market, this is the kind of thing you got to look for. It is something like Hershey's that probably will do well. Let's look at the checklist on this just to see how good it is. Well, it's pretty darn good. It's got an 89 checklist, and with the other stocks out there, they just aren't doing that well. Tech, of course, is terrible, but chocolate, that wins. That wins. This is a very defensive stock. Don't expect this one to go to the moon, obviously. The sales percentage increase, not spectacular, but at least it isn't going down. I mean, that's definitely the case here. So they had a nice little bump last quarter, up 15%, but their profits are up 32%. I think the reason for this is that the bars are getting smaller and the costs are getting higher. So, but anyways, this is the stock of the day, Hershey's. It's definitely actionable right here. So, it's right at the pivot. So you definitely could buy it. Now, currently in the small portfolio, I only have one stock. Can you believe that? Just one stock. I bought it for $330, and it is currently $325. So go figure. The rest of everything that I've got is in cash, just because it is looking better that way. Definitely all in cash. We're down a tad on this one. I have a spot set on this one at 316. Let's jump on over to the live chart for McKesson, MCK. And that, of course, is the biggest drug distributor in the world is McKesson. Let's first take a look at the daily chart on this one and see. All right, so here we go. This is the chart for McKesson. As you can see, we're coming up to the buy point. The buy point 338.83. We're at 325. So, you know, I bought it and then it went back. So let's take a look. I'm going to put the marks on it. These are my markups. I do this just so that I can see kind of where I bought it. But this is where I bought it on the 8th of July, just a few days ago, about 5 days ago. I bought it at 330, just a half a position. As you can see, I bought it there, and then it retreated, and then it looks like it's bounced off the 21-day line. Hopefully that's the case here. It's got a pretty good checklist. It's failing in two areas, but it's got an 78% checklist, which I think is pretty good in this market. And look at the technicals. Basically, we are just slightly below the 10-day line, and we're above the 21, 50, and 200. So it does look like we're probably going to get a bounce here, hopefully higher. The relative strength looks very, very good, and especially against the S&P 500. This black line here, of course, is the S&P 500, and it's headed down, and the relative strength against the S&P 500, of course, is headed up. So this is the only stock I have currently long. Everything else are shorts, and they're mixed today. I wouldn't say they're great, but they are up a little bit, just a tad. So that's a good thing. Here is Bitcoin, and I think that this is one thing that definitely is worth looking at. Bitcoin, of course, has a technical sell recommendation on it, so you probably don't want to be buying it right here. We are getting some support right about 20,000 on Bitcoin, but this is a chart that you can see of Bitcoin since the first of the year, and it's pretty awful. I mean, basically going down from about 47,000 all the way down to 20. So it has lost more than 50% of its value, about 60% of its value just in the first 6 months of the year. So not a very good situation for Bitcoin. Now, would I be buying Bitcoin here? Probably not. I think it's going to go below. Now, there's a key level on Bitcoin, and that, of course, is 16,000. If Bitcoin drops below 16,000, Michael Saylor, who is the CEO of MicroStrategy, one of the big software companies, who actually has a lot of Bitcoin, will have a margin call. And when he has a margin call, that means that there's going to be further selling pressure. So if this goes below 16, the next stop down is probably 11,000. I think that, and I've been saying this for a while, I think that Bitcoin could easily go to 8,000. And, I hope it doesn't, but that's kind of what it's looking like. Just a whole lot of pressure on Bitcoin. And, it's tough to play when, everybody's trying to sell it. So Bitcoin has failed in terms of being a hedge against inflation. It really isn't, unfortunately. It very much mirrors the NASDAQ and especially the top tech stocks right in that area. So tech stocks are not doing well, and of course Bitcoin is not doing well either. Here's another interesting chart that I just put together. This is on bond ETFs. Now, the question is, you're asking, well, Jim, you're all in cash. Yes, I am, and I'm not, I don't like being all in cash because it is moving a little bit down. What I'm intending to do is probably look at possibly going into the TBT. What this is this is a graph. The black line here, of course, is the bond index. This is the ETF that covers that, the TLT. It's been going down since the beginning of the year, but the TBT, which is an inverse of the bond index, that's been going up. So I do think that as interest rates go up, the value of the TBT goes down. Now, this is kind of weird, but if you remember back in your college finance class, you know that when interest rates go up, the value of bonds go down. And that's definitely been the case with the TLT. That's the ETF that covers the bond index. But with the TBT, of course, is the inverse of that. It's the 2x inverse of that. And that's been going up. So I probably, and I haven't really put anything in this. I'm just waiting for the right moment on this one. But the TBT, let's take a look at the live chart on this one. The TBT, there we go. There's the TBT. And as you can see, I have a few marks on it. Let's kind of get that busybody stuff out of there because, it's hard to see it when I have a marked up chart. Kind of see the exact thing. But basically, the TBT has pulled back down to that 50-day line, and then I think they're going to get some support there and hopefully going higher. Now, one thing that I'm not ready to buy it yet, and the reason I'm not is because even though the relative strength is an upward trend, the last basically month or so has been a downward trend on the relative strength. So I want to see this thing start to move upwards, and I do think that's going to happen, but right now this is on a watch list. So basically where I'm at with the TBT is I'm watch listing it at this point. And the reason I am, of course, is because it's just not ready. I want to see it. I want to see that relative strength line start to point up. Then I'm interested in coming into it. Obviously, if at the beginning of June, that was a great time to buy the TBT, right there, because the relative strength line made a very, very nice move, very, very nice move up. So that indeed is a good thing. And then of course it pulled back, and it's pulled down. So hopefully we'll get another bounce on that one. And I'm hoping, because that's when I'm probably going to start taking some of my cash and just kind of storing it there in that TBT. So that's sort of the long and the short of it. Let's get to some of the questions here. Thanks for holding, everybody. So appreciate it. Always like it when you join the show. Thank you so much. All right, let's look at the comments. Let's look at Tesla. Sandeep wants to know what's going on with Tesla. I wish I could tell you. It's been a roller coaster ride. This is the stock that I did really, really well on about 18 months ago. If you look at some of my older videos, I was able to do very, very well, and I haven't held it since I got stopped out of it. It's just, the problem is, right now in this type of market, just not a great time to buy Tesla. Unfortunately, it's down after hours. It was up today, a little bit of a dead cat bounce here, but it's down after hours. It's down about $4 down after hours. Here's the thing with Tesla. I definitely think that there is a support level that we're going to see probably at the support level is about 620. Can I draw the line in here? That's about the support level for it. If it falls below this, and it could reverse higher, but if it falls below this 620 level, I think we're going to see it move a lot lower. I hate to tell you that because I'm certainly not. I'm not in the. I'm not against Tesla at all, but don't buy it here because it definitely looks like it's going to go lower. I think we're going to get some support at about 500. It just depends on how things go. Now, look at the numbers. The numbers are pretty good. I mean, look at that. Their sales are up a whopping 81%. This is very hard to do. Tremendous upgrade in profits. Now, here's the problem going forward, though. And we've got earnings in 7 days on Tesla. So here's the thing I'm thinking about Tesla. I believe that we may have a situation very, very shortly with Tesla where they miss their numbers. And why? Because I believe that the Shanghai facility is closed currently. So even though Tesla, one of the good things is the order book for Tesla is full. It's a question of how quickly can they deliver. But right now, the stock, remember, the stock's a forward-looking indicator, and right now the relative strength on Tesla is flat. That's this blue line here. It's flat and actually starting to. It just kind of just flat. So right now, I don't think it's the right time to buy it. I think that we need to wait to see some strength. I'm hoping to see some strength here. But it's just not the case. I mean, right now we're basically at the 10-week line, and we are 21% below the 40-week line. So this is not very good. Right now, it's underperforming the rest of the market, and the market is not doing well either. So it's a double whammy. It's not, the market itself isn't doing well, and Tesla is not doing well either. So taking a look at the daily chart here, we've got a situation where, of course, the S&P 500 is moving down, but also Tesla is moving down. And what I'm seeing here, this is the black line that I'm looking at here. This is the 200-day moving average, and you notice it's starting to curve over and downward. That means then, fortunately, right now there is disinvestment in Tesla. Some of the big positions are having to sell. I think Kathy Woods had to lighten up her positions because she was so heavy on it, even though I think she likes it long term. But here's the thing that we have to be concerned about with Tesla. Some of the funds are starting to sell out now. Back in March of 2022, we had 3,874 funds in it. Currently, we have 3,700. So the number of funds that are in Tesla are dropping. So not a good time to be it. Remember, we're trend traders, and we want to follow the trend. And right now, unfortunately, the trend for Tesla is for disinvestment. I hate to tell you that, but boy, I wish it wasn't that case. All right, NASDAQ green today, but red after hours. I know. It's so hard to trade this market, Jay. You're absolutely right. It's so tough to trade this market. Let's kind of look at it. Let's look at the S&P 500 and then let's compare it. Here is the S&P index, and as you can see, unfortunately, another down day. Not the greatest thing. Let's compare it to the small caps. Because the S&P is a much broader index. A lot of the tech is in the S&P 500, not necessarily the NASDAQ 100, but in the S&P 500. So let's take a look at this regarding the small cap stocks. So here I'm going to pull it up here. This is how. Let's see if I can show you this. All right, let's see if I can show you this real quick. And let's go to the next. And I should set these up beforehand. I know sometimes I don't do that. This is the S&P 500, and as you can see, it's in a downward trend. If we add the Russell, let's add the Russell because that's the small cap. So that's going to be let's add the Russell to that. Let's compare them in terms of. Let's see if I can. It's Russell. It's 0 or there we go. Russell 2000 index. Yeah, here we go. Here's the Russell compared to the S&P 500. As you can see, the small caps are underperforming the S&P 500. So definitely. If you're in anything, you want to kind of stay out of the small caps because it has been underperforming the S&P. Now, if we look at the at the TBT compared to that, this is the bond fund. You can see this is doing better than this. So basically, what I'm trying to say is that right now their market is selling off and it's moving into bonds. It looks like that's kind of sort of where it's going. And we could probably take advantage of some of that with the TBT. So it's just a mixed bag. I'm mostly in cash. I'm just looking for a place to put it. Thought it was moving up today. Well, it was. The TBT was moving up, but then it didn't. So let's look at the daily chart on the TBT today. And the reason I like the TBT is the inverse. As interest rates go up, theoretically now, this one should go up. Now, it didn't today. We had this announcement, but I suspect tomorrow we're going to see a spike in this one. Why? Because I think that with this inflation, we're going to have to deal with it. And one of the ways they're going to deal with it, of course, is they're going to raise rates again, even though the economy even though this will this will slow the economy, but it will put a little bit of a break on inflation. So I do expect, at least in the near term future, for the TBT to move up. Now this is the daily chart. It moved down today, but if we go back here, let's see if we can. I want to go to like a 60-minute chart here, kind of show you what's been happening. Really hit its peak, back here on the 15th. Of last month, and remember everything's anticipatory. Then we've been moving down, and I do expect we're going to get a reversal. See this buying coming in here. I don't know if you can see this. At the end of the day, there's a lot of buying, and I do think we're going to see a bounce on this because the rates are more than likely going up. So, but I'm not in the TBT yet because I want to see a clear break to higher ground before I put any money in it. I mean, it's just, right now as I say, I've got McKesson and cash, and then a bunch of Barefoot Spreads. So really nothing, very very little. I'm very very light in the market. I'm very very light in the market. Yeah, I agree with you. The Fed is awesome sometimes. Okay, let's do Google. This is a question from TikTok. And of course we're broadcasting on TikTok. By the way, if you're listening on TikTok, you can see all these charts by going to the YouTube feed. Super easy to do. Just go to my profile, click on the link, and you'll see it. It's at www.youtube.com/Dallas Trading Floor. So let's look at Google. GOOGL, of course, is the symbol for that one. And this is Alphabet. They changed their name, of course, but they still trade under the symbol GOOG, GOOGL. And here is the chart for that one. And it is looking, well, it's okay if you like stuff that is moving lower. Definitely not the time to buy this. I'm not ready to short Google yet, but it doesn't look good to me. I mean, this trend just is not good. This is part of the reason why the NASDAQ is not doing that well, because Google has been in this downward trend. And really, it's been this downward trend since about March. It did make its high back here, 2175, and then it's moving lower. Now, would I buy this thing right now? No, I wouldn't. I wouldn't. I just don't think it's ready to go. Let's go to the monthly, kind of take a 20,000 foot view. This is a big deal because it has been trading above the 30-week line pretty much for quite a while. This is the monthly chart here, the 30-month line. This is the furthest out it's going. It's starting to, I think, get a little bit of support here at the 30-week line, but who knows? If you go back in time, you can see where it's tested here, and it looks like it's testing again here. So the question is, if it can hold this, which, I'm not totally sold that it can. If it can, then I think we can get into it. But if you notice, it came right up to here, and then it's been pulled back, and it's down after hours. And it's down, it's about 0.5%, but it's still significant. So here's the thing. I just think, you just can't, you can't trust. Google, is just not the right thing to be in right now. Question for, is it a good time to short Tesla? I'm afraid to do that. I think your thinking is right on. Your thinking is right on, Sandeep. But I don't think we can short it here just because of the nature of Tesla. I don't like it to short it. Now, here's why I probably won't be shorting Tesla. One of the things that you need to have happen, one of the things for a short is you want a stock that's doubled, tripled, and quadrupled. Tesla definitely qualifies in that category. But you also want to start to short it where you start to see the 50-day line move below the 200-day line. And it does look like it's coming up to the 50-day line. So this potentially is a good place to short it. I agree with you. But here's the thing with Tesla. I'm just afraid that we're going to get a super duper big bounce here right at 620. And the reason I do is because, and Jim, why is that the case? Well, because there is a pivot at 900, and look at all that overhead supply. So I just think, I just don't think it's a good short. I just don't think it's a good short. I think we could get really killed. So my take on Tesla right now is, I'm not going to go long or short on Tesla, So I'm not going long or short on Tesla. And I just want to see more of a trend. I just want to see more of a trend here. I'm just not willing to risk it because I think it absolutely could reverse and move higher. And if you shorted it, you'd really be kicking yourself. So I'm not willing to go long or short on Tesla right here. Just not the greatest. Thanks, Lisa, for the question on the Spider and the QQQ. Let's look at both of them. First of all, let's take a look at the Spider. Of course, this is the S&P 500 ETF. This covers the S&P 500 in an ETF form. And let's click on over to that one. Yeah, see, and we've been in a downward trend on it. Obviously, we went down more today. I do think that eventually we're going to get down to 320. I know I've been saying this for a while. Maybe I'm being too pessimistic here. There is some support. There should be support at about 380. I'm sorry, at 360. But I do believe it's going to pull lower than 360. I think it's going to pull all the way down to about 320. Also, let's look at the Qs. The Qs obviously is really in a worse shape because it has so much of that big tech exposure, and that's of course down today as well. So let's look at let's compare them. Let's compare the. There we go. Okay, pulling this out. This is the Qs, and let's see if we can put in the Spider and kind of get a look and see kind of what the divergence is here. The Qs obviously underperforming the Spider, so that's not a surprise because, of course, they were the ones that ran up the most. The Qs were the ones that ran up the most, and now they're taking it most on the chin. But almost a very, very similar pattern on both of these. But comparing them, of course, the Spider has outperformed, if you can call it that, the Qs. Not a good look. Not a good look. Now, if you were to go to some individual stocks in the medical area, I'm talking about like McKesson, MCK. Let's take a look at sort of how that has performed against these two indexes. It's not really fair because this is a single stock and these are both indexes, but this is one of the reasons why I'm in McKesson right now. As you can see, it does have a little bit better profile than either of the two areas. The areas that are getting the love right now, medical definitely is getting the love, and some of the consumer staples. Even energy is off. As a matter of fact, we can chart that. This is the XLE. This is the Energy Select Spiders. You can see we were doing great on energy up until about June, the first week in June, and then boom, look at that. It just fell off the face of the earth. So right now there's a shift going on from, the general indexes are both obviously down. The Spider's down about 10% because that says 90 there, and the Q's down 20%. Wow, since the first of the year, not a good look. Medical is looking better than just about anything right now. The leadership is starting to shift from the energy sector. The energy sector basically was the number one sector up until June, and now we're moving into medical. So medical is probably looking a little bit better. I'm not saying all medical. It's really a mixed bag, but it's looking somewhat better. Let's look at let's compare against the XLP. I think this is consumer. Let me see if that's right. XLP. Let's look at that. XLP. This is the consumer. So this isn't doing, this is also, but pretty much similar to the Spider and the QQQ. So XLP doesn't really give us any help there either. So just not great. So I'm looking right now in the medical area. That's where I'm looking for potential targets. And it's not easy because there's not really that many great ones in there either. So that's why I'm so much in cash. Yeah, just bad news. TSLQ is launching tomorrow. That's the short Tesla ETF. Interesting. I didn't know this. This is news to me. Thank you for that, Lisa. This is a way you can short Tesla in your retirement account. So that might be a good thing. I would be very careful about buying this one. Tesla can be really a hard taskmaster. So I would wait until there is a clear trend. Right now, the trend on Tesla is moving lower, but it could get supported about 620. So I'd be really super duper careful on that one. So watch this one. Never buy. Try never to buy anything when it comes out of the gate. It's a good idea to wait, and see how it trades. So be very careful on that one. I just think. KR looks like every stock is beaten down. Pretty much every. You're right. I mean, you're right. We have it's the king of the beatdowns here. It's just it's amazing how all these stocks just there's just really isn't hardly any there's just hardly any safety from the beatdowns. But one of the areas that seems to be working is medical. Let's go to the list here. See if I can get the industry groups up here in a second. There we go. All right. So let's see rank, and we're gonna kind of look at the coal is still the number one rank, but the stocks that are coming up are in the medical area, which not my particularly favorite area. Believe me, I'm really not a fan. But that's what this is saying right now. So if we look at it, energy's number one. This is, by the way, the most increase since the first of the year. So not saying that these necessarily are producing the best results right now, but they are. If you look down the list, medical wholesale supply. This is one that has really come up, and this is where I'm looking right now for potential candidates, and that's in the medical, wholesale, and drug supply. And that's why McKesson, you can see top stocks in the group, McKesson's number one, and then AmerisourceBergen, this one also potentially good, and Cardinal Health. So, this is so unexciting, but it is something you can look at. So let's look at American SourceBergen, symbol ABC. ABC, this is interesting. This one potentially could be a buy off of the 200-day moving average again. But look at this chart. It's really not that great. We have this downward trend. So, here's AmerisourceBergen. It's number two in one of the best performing sectors, and it's got a downward trend. So, there's just not a lot of there. It's just amazing how it's difficult to buy anything in this area. So let's go see if we can find something. Let's look at the top stocks here. Let's look at this one. Let's see how this is performing. This one might be. This is extended. Look at that, and it's a $7 stock. So really can't buy this one, but it's looking good. It's just not buyable. Just not buyable. Look at that relative strength line, though. It's really, really strong. But I wouldn't buy this one. So that's kind of why I'm stuck with, McKesson. That's why I'm stuck with them. Not the great. All right. Jim, how's your best? Okay. Doing okay. Let's take a look on the Barefoot Spreads. And that. Thank you for reminding me. What I'm going to do is I'm going to switch over. And we're going to kind of take a look at all of them here really quickly. Thanks for reminding me to show that. Okay, so here we go. So let's share that screen. Okay. And there we go. Okay, so here are the Barefoot Spreads. And let's take the one on the Lululemon. I thought I was going to do better on this one. Again, this is sort of this has sort of been the tale of two cities. I'm telling you. I think I'm going to do well. I think that Lulu is going to take a dive, and this is why it's so hard to short. I'm telling you, it's so hard to short. This one is getting better right now. This is Lululemon. Um, the short on this one is it's a 270 260 barefoot spread. I have till September to make it work. Currently, we're down 117 bucks on this one. Our initial cash outlay, $485. So hopefully, as you can see, that if we get further down the road, hopefully, we will. Oops. If we get further down the road, we should see this one trade better. So let's look at the table to see if it is going to make sense. There we go. So right now, the dotted line is where it's at. It's about 281. If this thing falls, then we're going to start to make some money. And we have some time for this one. We have some time for this one. But I'm still underwater on this one, which, not the greatest. So let's look at my barefoot spread on Snowflake. I thought I was definitely going to be able to do better on this one. We're down a little. We're down 74 bucks on this one. Snowflake has been falling, and we do have a little bit of time on this one as well. September 15th is the time frame for this one. And it does look like, if we drop, we have to drop about $10 a share, which I think is doable on this one until we get into the green. So that one again is underwater. We put out 420 bucks on this one, and we're down about 74 bucks. All right, let's look at American Express to get some good news. We're up on the American Express, barefoot spread. That's getting better and better as American Express is deflating, and American Express has been deflating. So we are moving up. We're moving up to the right. We're getting on the right side of this. Taking a look at the chart here, we're starting to get into that nice red zone, and that's sort of where we're starting to make some money. So as this thing falls, hopefully, we're going to move into some more of the good stuff there. And let's look at Starbucks. This is another one that I think you would think that this would be doing worse than it is, but I guess some people are buying Starbucks. We're down on this one too, and this one we rolled out, so we have a little bit more invested in this one, about $322, not a lot. So we're down about $192. Let's see. Last one is the Bill.com. Let's look at that. And this one, I don't know what's going on here, but I'm down on this one too. Put out $540, did do a roll on it, and we're down about $253. So this one has to fall basically another about 15 bucks a share before we get on the right side of this on the right side of this one. So that's kind of how I'm doing. I haven't closed any of these out. I do think we're going to get a downward leg here. If we do, of course, these will work. The American Express is working right now, and I think if what happens and what I think is going to happen with the market, we're going to get another leg down. And if we do, then these will start to come into the green, I'm hoping. You do exactly opposite of Jim Cramer. Very good point, by the way. Jim Cramer, I believe, is a tout. Nothing wrong with it. He gets paid millions of dollars. He's very rich, and he has a nice home in New Jersey, and I don't. But he's telling people to buy. He's a buy in the dip guy. Don't buy in the dip. Please don't do this. This is a great way to kill your portfolio. Here's the thing. We're trend traders here. We always want to cut our losses short. We want to let our profits run. So if you are down more than 7%, I know this is very, very painful. Believe me, I lost a ton of money before I learned this rule, but never let the stock move against you more than about 7% from your buy price. So if you bought a stock and it moves down 7%, just put it in a stop loss. You'll sleep better at night. I mean, you might get up and you go, oh my God, I got stopped out. But you know what? You don't want to be what they call long-term investor. And the long-term investor buys a stock and then it goes down and then it's like, well, it'll come back. I'm a long-term investor. Don't be a long-term investor. you don't, unless you have an insurance company like Warren Buffett, you don't want to be a long-term investor. So any stock that goes down on more than about 7%, cut your losses short. You can always buy it back later. Just it's more important to protect your capital right now than anything else. All right. If you look closely at the jobs report, there were 4 million. Yeah, so 4 million ad jobs were a majority of people of moving jobs. Exactly. Well, see, you cannot trust, and I know this is bad, but you cannot trust the government, because the government primary duty is not to tell the truth. It's for the bureaucrats and the elected officials to stay in power. So they're going to do everything they possibly can to basically fudge the numbers, and that's sort of what we've got with the jobs report. I think we are facing, unfortunately, and I don't like saying this, but I think we're facing a very large unemployment, and I think it's going to be bad. And that's part of the reason we've got stagflation. And I've actually lived through this myself, and it really stinks. It's harder to get a job. The prices go up, and and everyone gets poorer because inflation affects pretty much everyone, and it's really, really, really sucky. But what can you do? All right. AMT thoughts, especially long term. Well, the thing about long term, at least for me, is that, and this is what John Maynard Keynes said exactly. In the long term, we're all dead. So I'm essentially a short term trader, and the reason is because I can barely predict the future a few months out, and if it goes a little bit longer than that, I have a situation where I can't do it. So my long-term projections are I wish they could be better than they are, but they're not necessarily that great. So let's take a look at AMT. There we go. And let's see, for AMT long term, this is American Tower. This is actually a good REIT, by the way. I really like this one. There's another one called Crown Castle that is similar to this one, and I do like this long term. Unfortunately, I don't like the action that it is in right now. It's in a downward trend, and it is in a downward trend. I don't like to buy stocks when they're in a downward trend. Now I'll hold them sometimes when they're in a downward trend, but sometimes it's not a good idea to do it. So let's look at kind of what's the situation. Let's kind of make this easier, and let's look at Crown Castle. Okay, let's look at Crown Castle. And this is the chart of Crown Castle, and let's run it against. I think I think American Tower against Crown Castle. I think it's CCL. I think that's it. If I'm not mistaken. No, that's Carnival. I'm sorry, that's not right. I'm just trying to think of another good REIT. Equity Lifestyle. Let's look ESL. No, equity. All right, let's look at AMT. Okay, disregard. Let's see if I can get rid of Carnival Cruise Lines. Just disregard Carnival Cruise Lines. But these are two of the better REITs out there that are kind of unusual. AMT, of course, is in the tower business. ELS is in the mobile home park business, believe it or not, and that is also a top performing one. And let's also look at. I'm trying to think of another one that is interesting. This is a billboard REIT. It's called Outfront. And I just want to kind of look at it. Okay, so that's underperforming. So yeah, no, AMT is looking good. If you're looking for a REIT, it's got a good look. It's got a good look. Yeah, don't look at Carnival. I'm sorry, that's wrong. Outfront. This is also a REIT that has billboards. AMT. I think this actually, if you're not down 7% on this one, I would hold it. So here's the Here's kind of the here's kind of my thinking on American Tower. Um, I think that it's a good one. Now it depends on where you bought it. This is always the question. It depends on how long ago you bought it, because if you bought it a while ago and you've moved up here from like 232 to all the way up here, then you definitely have a hold here. But if you just bought it like a few minutes ago, I would be careful here if you're down more than 7%. So that's really the rule. It depends on when you buy it. It's always the answer is long term. It depends. The question is when you bought it. Now it did show, along with everything else in the market, did show weakness starting in about January. So that's pretty much when everything else got really the weakness started from about November to January. That's when the weakness started. It did rally to the 50-day line. It's come back down. It's rallied to the 200-day line again. Come back and rally to the 200-day line. I don't like that action, to be honest with you. I don't like that action. If you're down more than 7%, I would sell it and then wait for an upturn. The relative strength line is not bad. It's moving in the upward direction, whereas the S&P is moving down. So that's a good sign. So it depends on where you bought it. But if you've bought it and you're less than 7% down, I'd hold. But if you're down more than 7%, I would sell this one. I would absolutely sell it, just the way it goes. All right. Not sure if you missed. I'm too late. Can you look at Apple? I haven't done Apple yet. Let's take a look at Apple. 46 minutes. Okay, so I'm getting to the end. I'm afraid AAPL is the symbol for Apple. All right, Apple. And Apple is one of the largest stocks, obviously. I'm Captain Obvious today. In the Nasdaq. So as the Nasdaq goes, if Apple is having a bad day, the Nasdaq is having a bad day. Apple is in a downward trend. I mean, that's just a fact. The relative strength line, it's starting to move up, but basically the relative strength line on Apple has essentially been flat since December. So 6 months, it's pretty much been flat. This is not something that you want to probably should do. Now, it may move above the 50-day line, but I'm guessing not. The relative strength line is not bad. 69, pretty good here, but I would not be a buyer of Apple. I just wouldn't be a buyer of Apple right here. I wouldn't be a buyer of Apple. Now, people will say, well, yeah, I can buy it on the reversal, and maybe you can, but we are in a downward trending market. I just think you got to be careful, and you just got to be careful in this market. So I would not be a buyer of Apple here. There's not a whole lot to buy. I'll be honest with you. I've been looking high and low and seeing which sections of the market are doing the best. Right now, medical drug distributors the best, and that's basically McKesson. So not a whole lot of stuff to buy. Just very, very hard market. That's all I can say. We may have to go with some things like the TBT in order to counteract it, but I'm not in that yet. All right, so WMT, this is the last one. Thank you so much, Charles, for watching. WMT is Walmart, and this is really the bellwether of all bellwethers. I think that Walmart has the largest sales of any company in the world. I'm pretty sure of this. It is obviously a behemoth. That's why as Walmart goes, so goes the rest of the market. Now, Walmart is starting to rally a little bit. We do have a relative strength line that is moving up against the S&P 500. That's looking okay. But I want to show you, if you're interested in retail, and I do think that discount retail is one of the few safe harbors out there. Let's take a look at Ollie's Bargain Outlet compared to compared to Walmart, and I think that's an important thing to look at in terms of Walmart versus Ollie's. Okay, very interesting. So this is why I always like to look at the charts, because believe me, if you just do it by far, if you seat of your pants, you usually lose, because I would have thought Ollie's Bargain Outlet would have outperformed Walmart, but that is not the case. So if we look at Walmart versus Ollie's Bargain Outlet, this is kind of two sides of the coin. Walmart has outperformed since the beginning of the year, has against Ollie's Bargain Outlet. Now, Ollie's Bargain Outlet had been making this move, this fantastic move up off the bottom. Obviously, that's when you want to buy something, is when it's making its turn. But it has since turned down, whereas Walmart is essentially flat. So what does this tell me? Well, not a whole lot, I can tell you that. But what this sort of says to me is that they're both bad. And to save your money, don't risk your money, because this just is not a good market. It just isn't. All right, let's do save. I think this is Save Mart. This is probably the last one. I'm going to put save in there. Just kind of like look at this is a retailer, I believe. SAVE. I'm going to put that on the chart. Yep, there we go. All right, this is Spirit Airlines. Okay, Spirit Airlines is doing better than I thought. That was a different company, so I apologize. So that looks like that's interesting. So Spirit Airlines, of course, is going to be getting acquired. That's that's sort of the that's sort of where that's sort of where it's going. Is that it may get acquired. So let's put up the chart of save. This will be the last one for today. SAVE. And yeah, okay. So it moved above the 200-day line. That's interesting. Very, very interesting. Let's put that chart up there. All right. So this is the airline, Spirit Airlines, of course. Great. By the way, great deals to the Dominican Republic. I've actually used them. We have an upward trending relative strength line, so that's good. So that's very, very positive. And it's trading above the 10-day line. That's very positive. The 40-day line has not still come above the 200-day line, but in general, that's actually looking fairly good. That's looking fairly good. So very, very interesting. Can we buy this thing? Well, let's take a look. I don't think we can buy this yet, unfortunately, just because it's 67. Okay, so that's the minimum for my on my checklist would be 67. So it does make the minimum there, which is very good. Let's see if we have. Okay, we're basically $14 below the pivot. Wow, that is a long way. The pivot is basically at 27.68. And that is a ways up. So the question is, has it reversed and is it going higher? It looks like a double bottom pattern, which, that is a strong pattern typically. So yeah, I mean, you might be able to nibble at this one. I would have said no, but look at that relative strength line. That's a good relative strength line. This is a double bottom pattern. Very nice pattern. And it's above the 200-day line. You know what? This actually might be actionable. That would be incredible if that was the case. Because I'm so down on everything else. It's terrible in terms of the it's 166 out of 197, so it's in the bottom third. It's in the bottom third of all stocks, but it's starting to look good. Here's the thing: you might, I think it's too early. Well, you could take a nibble at here. I take a quarter position. I would just basically a very, very small position. So you could possibly go in with a quarter position, but I would go in with any more than that. It just it's just not there. All right, let's take a look and see if let's compare Dollar Tree and Walmart. That's a good comparison, by the way. So I'm going to go over here to Dollar Tree, DLTR. And about 2 months ago, I'd actually made some money on Dollar Tree, which was amazing because this has not been the greatest few months for me. All right, so let's look at Dollar Tree. This is Dollar Tree's chart. And let's compare it to Walmart. Let's see which one's the best. Well, you're definitely right. You're definitely right. Yes, you are. Dollar Tree is far better than Walmart based on this comparison. So, Dollar Tree's up here. So you are absolutely right. Dollar Tree versus Walmart. So the discounters are the way to go. Let's put in Ollie's just because I like Ollie's. And that's OLLI is the symbol for that one. Let's see if Ollie's comes in. I think it's in here, but I don't know if you can see it. It should have been added. Let's try it again. OLLI. There's Ollie's Bargain Outlet. And it should update that chart, and it's not. But I can almost guarantee you that it is doing pretty well. So, thank you everybody for taking a look at the show today. I'm sorry I don't have any better. I don't. Not a bad idea. Puts on. I think you're probably right on that. By the way, Damon, I think yeah, you might. That's not a bad idea. I think it's probably going to go down. Everybody, I'll be back tomorrow at 5. Thanks so much for watching. I so appreciate it. Just want to ask you a favor, if you could. If I can get, if I can get some. If I could get you to possibly go in here and give me a like, because that really helps a lot. That really helps a lot. So hit that like button, please. I really need that. And also, if you're watching on TikTok, please like it as well. But also go over to the YouTube channel and please subscribe. That would really help. I know that everybody's. So I'll be back tomorrow at. I'll be back tomorrow at 5. Thank you everybody for watching. And if you're not already a member of the Action Trader, it's super easy to get that. It's free. It's www.Dallas Trading Floor. And so everybody, I will be back tomorrow again at 5. And happy trading. And just right now it's a tough market to trade. Be very careful. Try to stay as much in cash as you can.